Now this is a very debatable topic, but who's afraid of a nice little debate? If you have been living under a rock for the last few years, then you might not know that everybody is buying Bitcoin and other cryptocurrencies. Cryptocurrencies are forms of payment that can be exchanged for goods and services. Bitcoin is the most popular one, but other cryptocurrencies like Ethereum, Dogecoin, and Cardano have also gained popularity. A lot of people might disagree with me on this topic, but I read one statistic that scares me to death. About 44% of those who own cryptocurrencies are people of color. This is an extremely high number considering how volatile the crypto market is. So on this episode of The Five, I will give you my 5 reasons not to buy Bitcoin or other cryptocurrencies. Hi, my name is Jared and welcome to The Five, where we share 5 interesting things in Black culture and society in every episode. Don't forget to subscribe and hit that bell so you can get notified when we release new videos. And by the way, just like you guys requested, we've started a new channel dedicated to everything about money and investing. Check out the link below and subscribe to our new channel called Finding Fortune. A survey last summer by NORC.org at the University of Chicago found that 13% of Americans reported having purchased or traded cryptocurrencies in the past 12 months. Of those, 44% were non-white. 41% were women and 35% had annual household incomes of less than $60,000 a year. The average trader was under age 40 and did not have a college degree according to the survey. Data shows that while fewer Black Americans invest in stocks than white people, they are actually more receptive to holding cryptocurrencies. Buying a stock is buying a tiny ownership in a company. Buying crypto only allows you to use it as digital currency, but is not backed by any asset. What makes crypto so appealing is the chance to double or triple your money in a short period of time, because of the hype compared to the average stock investment, which done right can get you an average of 8 to 10% annually. Social media spaces like Clubhouse have become a gathering place for those looking to close the investing gap between the races through cryptocurrencies, but that comes with its own risk. Here are my 5 reasons for not investing in Bitcoin and other cryptocurrencies. Number 1, let's remember the dot-com bubble of 2000. If you are familiar with the history of booms and busts in the stock market, then you should know all about the dot-com bubble of the 90s leading to a bust in 2000. In the 90s, investing in the internet, dot-coms more specifically, was all the rave. Some companies made absolutely no money, but simply put a .com after their name, and many investors poured millions into them in anticipation of them making money in the future. New internet-based companies were popping up everywhere. The value of the Nasdaq, home to tech stocks, grew from 1,000 points in 1995 to more than 5,000 in 2000. Companies were asking huge prices for their stocks when going to the market, and sometimes the value of those stocks would double on their first day. It seemed like anybody with an idea for an online business could easily make millions. But the party came to an end. Many of the dot-com businesses were wiped out, and even giants like Amazon lost 90% of its value. Investors were left in the dust of the crash, many losing their life savings. New industries like cryptocurrencies usually start with a lot of excitement and euphoria around them. But historically, a bad crash comes that filters out what is truly working and what is not working. If you get caught up in the hype and invest all of your money in these markets, the chances of you getting left in the dust when the crash happens is very high. Number 2, governments still don't know where they stand on Bitcoin and cryptos. Bitcoin is a decentralized currency, meaning it's not overlooked or managed by any government or centralized system. However, governments around the world can still play a big role in its success or downfall. Some countries seem warmer to it, while others are very wary due to the lack of control over it. Crypto has also become very popular in criminal activities. Many hackers now asking for Bitcoin as a way of ransom payment. These reasons make crypto unpopular with many governments. And when a government is wary of a new technology, it can set up new rules and regulations to limit the use of that technology. Number 3, Bitcoin is still incredibly volatile. If you've been following Bitcoin for a while, you know the prices of Bitcoin can experience wild swings within days or even hours. As in any investment, this makes trading it a dangerous venture. On top of that, it trades 24 hours a day, 7 days a week, which can lead to some sleepless nights for those who have invested most of their money in this market. This instability is common for young currencies and markets. At the end of 2017, Bitcoin was at $20,000. In February of 2018, just within a couple of months, the price had dropped to below $7,000. Currently, Bitcoin is above $40,000 and has even reached $60,000 recently, but it can easily crash to half of its price now within a few months again. So if you're buying into Bitcoin at any price point, the chance of rapid drops are very likely. On top of that, research has shown that a large percentage of black Bitcoin owners have a net worth of under $60,000. That means many black crypto investors might be putting money they can't afford to lose in these volatile markets. Number 4, the 2008 housing crash and the black community. It is no secret that black people in the US have been systematically left out of building wealth for generations. For that reason, we are always looking for ways to catch up. And sometimes we get caught up in booms and crashes at disproportionate rates. The 2008 housing crash is a prime example. Black homeowners were the biggest victims of predatory home loans during the housing boom. During the mid-2000s, banks and mortgage companies were giving out housing loans with flexible interest rates to attract unqualified buyers. The monthly mortgage payments started out low and skyrocketed over time. This left many homeowners unable to make their monthly payments while the housing market crashed. This meant the value of homes had dramatically dropped and foreclosures were the only options for many homeowners. Now we know real estate is one of the most reliable ways to build wealth. But if you get caught up in a boom, it is very likely you will also suffer when the bust inevitably comes. I fear the same might be happening with cryptocurrencies. Since the black community is investing at disproportionate rates in Bitcoin, if a crash happens, we will also get hurt disproportionately. Number 5, crypto is a non-productive asset. A productive asset, like owning a percentage of a company, has the ability to generate income outside of its stock price going up or down. Popular companies for investing like Coca-Cola, Amazon, Apple, and Microsoft all have products they produce or services they render, which means they generate income every year and a portion of that goes out to their investors either through stock buybacks or through dividends. And that's on top of their stock price that could keep going up year after year. Non-productive assets like cryptocurrencies have no way of generating income. Their value is solely based on another person wanting to buy it from another. That's the main reason why legendary investor Warren Buffett doesn't like crypto.
When you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing.
No matter what you hear or anybody tells you, nobody knows if crypto is here to stay or not. And out of all the thousands of cryptocurrencies that exist out there, no one knows which one is actually going to survive. On this subject, Derek Hamilton, a professor of economics and urban policy, said, and I quote, It is true that the traditional finance system have not provided access and frankly exploited black people. But the remedy isn't to turn to another vulnerable system. However well-intended it may or may not be. The remedy is a public sector that ensures they have access in an equitable way. That's it for this episode of The Five. We'll be back with another episode in Black culture and society.